Advice warning. The content presented in this presentation is intended for informational purposes only and provides general advice only. It does not take into account your personal objectives, financial situation, or specific needs. This information should not be the sole resource when making investment decisions. We strongly recommend you seek the advice of a financial professional. Hey there, everyone. Welcome to this week's edition of Bulls versus Bears. JT, welcome.
And hi. Thanks for everyone tuning in. And big week this week in the markets.
It was a big week. Started out a little bit ordinary, and then Oracle, of all companies, saved the day. So we had a horrendous payrolls revision, worst in history, 911,000 overestimated in jobs in the last 12 months.
Yeah.
And then literally 1.5 hours later, Oracle just didn't even hit it out of the park. Like it was, they launched it into the stratosphere, rallying about 40% this week. This week. I think it was up 35% on the earnings report. And Oracle's not a small company. So,
yeah, exactly right. And
Larry Ellison very briefly became the richest man in the world again, and then it dropped back.
And I will just say, I think you brushed it off, but let's just say that if those payrolls revisions actually came out in real time, you would have only been 2 years early instead of 2.5 years early in terms of your negative payrolls number. So.
No, we've only been doing this podcast for we're not even at 2 years yet. So
okay, so
yeah, no.
But either way, less earlier than you were, but you were sniffing in the right area.
Well, look, we're on episode 85. Let's just say that I would have been, instead of wrong for 80 episodes, I would have been wrong for maybe 55. So, but yeah, mate, it's now very special mention we're going to do this week before we get into it. Mr. Richard Nader made his Ausbiz debut, albeit possibly the most nervous man I've ever seen in my life leading into it, but he got in there and actually hit it out of the park. It was, I think, as his work dad, I was more nervous than he was. But yeah, he did a really good job on the trade today, and there's a couple of stocks that we'll talk about later that he covered that have, that he's been recommending or he has recommended or whatever. So. Yeah, mate. They even got him. He's even got an expert page already. It took me about 2 months to get an expert page.
Well, that's great. I mean, the thing was, I joined Rich on the way to the studio. A bit of moral support.
You were like a we need to get him a support animal, just about.
But either way, yeah, he did well, and the funny thing was, he actually said the scripted part was the hard part. Once Andrew actually asked him a few other questions and he went off the cuff, he was actually more happy with that. So yeah, either way, well done, Rich.
Yeah, no, absolutely. And look, first time I remember. This sounds like this story is going in a very different direction, but I remember my first time. And I didn't even, you don't know what the studio looks like. You kind of turn up expecting to, like a big studio in the old days, and you get up there and it's like literally just an office with a couple of webcams in it. Very, very happy for him, even though I ambushed him with about 16 hours notice. I think it would have been worse if I'd given him a week's notice because he just wouldn't have slept for a week. But yeah, so we, I think we were both, I believe we might have been, I was bearish because of payrolls. But we have rallied this week, and we nearly did get a negative payrolls. It was 22,000, and but June was revised down, so we have got an official negative now. If you go and include those 911,000 jobs, worked out basically that means the economy hasn't added jobs for for 6 months. The Bloomberg chief economist said that if those numbers are right. And everyone's a bit sus. Like, let's face it, Trump gets rid of the Bureau of Labour and Statistics commissioner, and 6 weeks later, he gets exactly the payrolls numbers he needs, and inflation didn't go up this month, despite there being him bragging about how much tariff revenue he's pulling in. So, look, as tinfoil hat as it was, my theory on him manipulating the numbers, I think it'll never be able to be proven, but I can safely say I was right about that.
Well, that's the key with power, is that like if you don't like the answer, change how you mark the test.
Well, yeah, if you can't fire the Fed, change the numbers to force them into a decision. So, I think that potentially, and we'll get to this a little bit later as well, could bully them into 50 basis points, because he's been personally investigating Fed members and digging into their financials. So, look, there's political pressure, and then there's that. Like, he's pretty much just, that's real New York real estate mogul style behaviour, not very presidential. But let's get back to. I mean, all of this was essentially saved by Oracle this week, because it just flooded into the other 7 or 8 stocks, which happened to be the biggest parts of the indexes, and pushed it back up. But it was in more trouble than Skippy in a bushfire prior to that. And I saw that payrolls revision, and I was tweeting away, and the futures were down on the way to work early, and then and then by the time I got in, I flicked it back on and went, what? And it was all Oracle. So, but it was just an outstanding result, and really does prove that hyperscaling AI thematic, because you'll see here in a minute, in a couple of slides' time, that we had the scale at which it's amped up. They've already signed 300 since the earnings, $300 billion with OpenAI, and they're expecting to announce another 200 billion. So $500 billion basically in contracts before next earnings. So
wow,
we're not talking chicken feed.
Yeah, exactly right. I mean, look, when Australian companies here get a contract for a few $1 million, like that equates into billions of dollars in market cap. Same thing over there, but obviously there's just a few extra zeros on their contracts.
Yeah, no, it starts with a B or a T, not an M.
Yeah, exactly.
In millions, billions, and trillions. That's actually a beautiful segue, Mr. Takadena. ServiceStream, what did they get, a $1.6 billion contract this week?
Yeah, so I've actually been following ServiceStream for a while, and it's just I've been calling the engineering companies. They're actually not expensive. Like they're trading on like mid-teens PEs. Like some of the expensive ones are like 18, 19, which isn't much these days. ServiceStream, nice steady uptrend, pulled back a little bit, and then they came out with a massive contract. And the thing was, there were actually a couple of other engineering companies that I think Ventia Services was one, and I think NWH as well. So basically, it's kind of like the follow-on from the defense contract. So obviously, we know that the government has to spend money on defense, and now they're allocating who can actually execute these contracts, and some of the engineering companies are trickling down. So ServiceStream, I think it was up something like 20% on the day. Nine Entertainment, so that's actually down, I think 35% for the week. Thing is though, 25% of that was a special divvy. So that's the main thing there. And NextDC, great earnings and actually starting to tickle on higher. So I remember on the way down when they announced those new contracts, some of the sort of options bonuses that the new CEO was on, the share price had to rise well past the new highs and maybe another 50% higher. And like if the hyperscalers have to build out the AI infrastructure, NextDC could be a beneficiary. So yeah, there you go. That's it. That's the ASX stock highlights for this week.
I mean, NextDC, I don't know, something doesn't smell right with that for me. And look, I just think it makes Goodman just a much bigger buy. I don't know why Goodman's is mad. I don't know. It was a data set, and it's much bigger than NextDC in data centers, like much bigger. But all of a sudden, it's a REIT again. I think that's really good value opportunity for Goodman Group. If we do get any form of pullback, that is absolutely top of my list, particularly with those forward hiring numbers.
Yeah, I think it's already in the middle of a pullback. It's had a nice recent uptrend, and earnings pulled back a little bit. So yeah, I think with this market, well, the XYO is not at record highs, but with the rest of the world at record highs and the XYO likely to follow, yeah, I think Goodman's is probably a good opportunity there.
Yeah, I mean, look, I don't quote me on this, but I reckon Goodman's results were top line better than NextDC's, but NextDC is a bit of gets that thematic money because they're highly leveraged and stupidly leveraged. They keep getting those new bookings, etc. Not saying they're a bad company. I just think that when the air gets sucked out of the room and in thematics, NextDC is going to fall 3 or 4 times more than what Goodman's is, and Goodman's actually gets most of the upside as well, if not usually, and if not the same. So I prefer the risk reward. So it's not to be critical, and I also don't like spend half their AGM talking about how much they're going to pay themselves. I'm not usually a fan of that, but yeah, Oracle we've already touched on. And I think it's the next. No, I didn't. We'll have to go back. But are
you talking about the hyperscaling slide?
Oh, the slide. I'll put it up in front of my camera here, so you can sort of see that chart there, where there's a very large red bar on the side. That is just
hockey
how
stick.
much.
That's hockey stick, basically.
And no one saw it coming. Like we've got, as anyone who watched the podcast last week, we've got Oracle on that hyperscaling AI thing as one of our 2 picks with Google, and we've had that thing on for 10 days or 10 trading days, and I think 2 days after we put it on, Google got the antitrust ruling and it's up 15, and now Oracle's up 40. Look, I'd love to be able to claim that we knew it all along, but I was kind of that. I'd have been happy with that after 12 months. I mean, we've got a 2-year strategy here, so but yeah, look, it really does cement that the foundations of that data center thematic really, and Broadcom. Was it earnings this week as well, JT?
Yeah, I think mid or late last week, but basically another one hit it out of the park and actually has busted onto new highs as well. So, and then
and then Oracle came out, and it was just it was obviously so vulnerable to the upside. Well, not vulnerable. It was already on such a tear that it rallied like 9% on Oracle's news.
Yeah, absolutely. So yeah, and have to hats off to Richie. Broadcom is another one that he's liked for a long time, and clients are enjoying holding that stock.
I think they're up about 48% on that since we bought it back in June. We did trim some up around about 25%, but it's a bit more. It wasn't a global alpha, but it was one of his picks in the high conviction. So, which I started him, was one that he wanted to hold for a long time. So, if we're going to hold for more than 12 months, we tend to put it in the high conviction. But Micron was one this week that he's been a big fan of. It's been a recommendation once before, and then I can't remember what we made on that. But then he's re-rec'd it this month. Was it Monday? It's rallied about 10 or 15%, and then to yesterday, it went. Citigroup upgraded it into earnings in about a week and a bit. Like it'll be in 12 days' time, I believe. Earnings.
So I remember I actually recorded the video on that. So it was like buy at 132. It's going to break out here. I remember writing the script on the PDF.
On the global alpha rate.
Yeah. So basically, the target was 150, and you might want to trim some at 140, and it got there within 2 days. Basically, it closed at 150 already.
Yeah, he's revised the price target up now because he's expecting he wanted to get on before earnings. The Citigroup upgrade saw it rally 8% last night. So I mean, literally, yeah, we didn't expect it to get there, and it's done it in one go, all in one night. So the joy of us waking up and the market being
two
shut.
nights actually. 2 nights actually. Yeah. Not say,
okay.
Yeah. So it was actually it opened at 132, then closed at 140, and then on the next day it kept rallying to 150. So not that 2 days is a bad thing, but yeah, it was actually it was
more of a trailing stop. So the clients aren't actually out of it yet, and we will be revising up the price target. Depends on where it gets to, I guess. That's up to Mr. Nader. But the boy's on fire. But what happened in Google this week?
I think it was just part of the antitrust news there, and just generally it's rallying again with the Mag 7. So yeah, here you go. There's the weeks there. Yeah, Google green, Nvidia green. Funnily enough, with that Oracle result, basically it stopped the that downtrend on Nvidia, because that was actually looking quite weak. It
was looking a bit grim. I agree.
Yeah, and it felt like there was a lot of money coming out of Nvidia going into some of the other names. So that's why I thought, okay, well, it looks like money is pouring out of Nvidia and then going into say Broadcom as an example. And then Oracle stopped it in its tracks, and it just gapped up, and now it looks like it's back off to the races again.
I think you're right about. I think you're broadly right about that, because I mean, look at Nvidia down there. Nvidia is the top left. AVGO is confusingly is the Broadcom ticker code. It's up 17% nearly 18%, and Nvidia is only up about 4%. So I still think you're right about there being money flowing into Broadcom. But look, Nvidia's been such an incredible run. Apple, there, the outlier. Apologies, folks. We had some technical difficulties there. It appears as though our laptop just went to the big tech heaven in the clouds. So ignore the fact that my background's completely changed.
Is that a different type of cloud than normal IT cloud?
Yeah, that's a great dad joke. Yeah. It's definitely not Oracle Cloud.
Mm-hmm.
But yeah, sorry, I think where we're at was employment revision. So basically these are annualized here. Goes back to 2006. That's the biggest downward revision in history. And I didn't realise 2024 was so bad either. And that really does back up the comments from the chief economist of Bloomberg, where he's saying essentially that he thinks the US has been in recession since 2024. However, we still have inflation. So CPI, despite coming out as expected, is still 2.9. And the up 0.4 was the highest reading since January this year. So pretty much the largest this year. And yeah, so basically what that's done effectively is we were expecting we're about an 80 to 90% chance. It was swinging around of a 25 basis point cut next month. I think now there is going to be potentially 50, because, like I said before, Trump's basically digging into the private affairs of the Fed members. He's trying to fire them. He realizes he can't, so he's trying to either get some, muckrake, or he's obviously installed. It will put the Bureau of Labour and Statistics on notice as well. That revision's pretty, but look, PPI was slightly less as well, and he's claiming that hundreds and hundreds of billion in record tariff revenue. Well, who's paying for that? So because everyone's margins have expanded. So according to Wall Street, tariffs. So the Chinese aren't eating it. So I just don't, but so this is the rate expectations for December. And so instead of just going, I don't like, everyone's always, I don't know what the addiction is. I was an old interest rates trader. It made sense and I was trading 90-day bank bills. It made sense for me to be trying to predict what we're going to do on a month-to-month basis. But for equities people, like, you just need to know how long the cycle is going to be and how much. You don't need to pick it like to the month. So I pushed this out to December, and this is the CME FedWatch tool, and so we're expecting 75, and because it's a range, we're currently 4.25 to 4.5, and so the lighter the bar there, that was the expectation a month ago.
Mm-hmm.
Well, here we are, 75 to 100 basis points of cuts expected by December. So that's what it was only a 50% chance of getting that in back a month ago. And then like a week ago was that one. And then, a couple of days ago, it's gone to that. And then here we are now, nearly an 80% chance of getting, potentially, well, either four clips of 25, 3 clips of 25, a 50 and a 25, whatever combination you want to put up. But interestingly, there was no predictions of it being 325 to 350 at all a month ago, and now we're starting to see that happen there. So,
and hence why the market's at record highs. They're just pricing in cheaper money, and so the people are just saying that asset prices have to continue higher, and they're getting ahead of that. But and I just
which I am going to correct you on.
Mm-hmm.
It's only the last 10 years that's ever been an investment thesis or at all in any economic books. But that's the way the market thinks now. Lower rates, cheaper money, hyper growth. It's literally only since 2011 that's ever been. I dare say if you went back to 2011, if someone tabled that thesis, they would have been laughed out of a room. But now that's what everyone believes, and apparently economic weakness is. So I think with the Fed is now proven that they will print their way out. They will rescue any debacle that is possible. So the market now just goes, well, they're never going to let us fail. They're never going to let it go down.
Mm-hmm.
So they will just cut. So and which surely can't end. It could never end badly. It probably won't in the next decade, but it's just been a series of just kicking the can down the road, and but miraculously inflation as well. But it hasn't really on the headline not really come out. But what we've got now with that revision and inflation even being at 2.9, which the market seemed to be super happy with, which is the top of the band. We're in stagflation. So the two periods of stagflation in history are very extreme. So they're not great examples, but stagflation is a categorical disaster for all assets, except for probably commodities. I think that's about the only thing that does well, and it's mainly precious metals. But gold rallied about 400% that late 70s period, the last significant stagflation, but periods where we bordered on stagflation in the past as well, where you couldn't technically call it a period, but it was very close and never good for equities either. But interestingly, not once have I heard that word being used when we've had, basically the highest CPI print in a year, nearly 3% inflation, and payrolls getting hosed. Not once, not on Bloomberg every morning, not in the news. No, the word stagflation has not been used once, and at some stage it'll catch on. But and I think I'm going to do a word count every week. The more it gets mentioned, the more bearish I'll get. But until it gets mentioned, I agree with you. The market's going to go woohoo cuts. So
I just to all of that, the stock market is not the economy. So obviously I keep saying that, and it just gets more and more extreme. But here we are. As you said, clear stagflation numbers, but the market's just shrugging anything off, and it's done it again.
Well, yeah, if you know you're going to get printed out of trouble. I mean, we had a chart on while we did the store of value plus re-rolled that trade.
Mm-hmm.
Stock markets in real returns are are nowhere near as good, but we're not worried about real returns. We've got to get returns, and if they're going to keep printing money, things are going to keep going up. So it that's why we've got things like gold and silver and platinum beside it. Is that you've got to get on the rocket, but you've also got to preserve the wealth because
exactly.
Inflation just eats and eats and eats away from it. It's like, woohoo, I made 40%, but like, if that 40% by the time you get out is only worth 25, it's not much good to you.
Yeah, exactly right. As they say, like Bitcoin could be $1 million then, but it's like, what's the world going to look like when it's actually there? So,
well,
I mean, like, what's a loaf of bread going to cost? When things get so expensive,
it could be it could be in a situation where what was it? I think it was Greece had the drachma.
Yep.
I think and there was a couple of African countries that did this as well. They couldn't reprint their notes fast enough because the inflation was so bad they had to keep adding zeros.
Yeah.
So they did like a share split, so they didn't have to keep printing money.
Jesus.
But, it's pretty funny.
Yeah. So just on that story, one anecdote I heard on a podcast is that because Argentina's actually just gone through this, and that's one of the more recent ones, and they said, when you got paid, you had to go straight away to the grocery store. And what they said was you had to be in front of the guy with the ticket gun. It was basically, he was there twice. He was there twice a day putting prices up. So you had to be in front of him to actually get your groceries for the week. And I was just like, that's hyperinflation in action.
I've got a good anecdotal story. Coincidentally, is an old friend of mine. His wife worked at the Argentinian embassy and got paid in US dollars at the time that was happening. And she said she went from struggling to find a 2-bedroom unit to being able to rent a mansion in about 3 months because she was getting paid in US dollars and no one else was. So, she said, she was really upset because she'd handed in a resignation, well, because it was starting to get a little bit punchy politically over there as well. Like, people weren't particularly happy about hyperinflation. So she was trying to get out, but she said the last 3 months she was there, she's like living like an absolute queen because she was getting paid in USD. So, it's the ups and the downs. So
exactly. So I think commodities. Oh, there you go. Yeah, I was just getting ready. Wow, I didn't realize coal dropped that much and uranium up. But I shall go from the left to right. Gold made new highs. Silver made new highs, and there was actually a big move just during our session here in Asia. As you said, as soon as China opened up, we saw silver futures hit 42.70 thereabouts. So big move there for silver.
And currently we are, and it's 3:00 in the afternoon here. Currently trading at a fresh high of 42.80.
Oh, there you go. So silver, the silver rocket, well on its way. I've noticed copper had a good bounce this week. Platinum as well, and palladium all stronger. Crude weaker, and good old crypto. So one thing I've noticed in crypto, Bitcoin hasn't moved too much. Ethereum hasn't moved too much, but old mate Solana, I don't think it's new highs, but I think it's trading around the 225, 230 level. So some of our clients love that Solana trade, and they do have a position. So well done to them.
That could potentially have something to do with NASDAQ filing for tokenization with the SEC. Potentially,
because I forgot about that.
Yeah, because I think it's always been touted that Solana would be probably the best use case chain.
Mm-hmm.
Our resident crypto who's joining us, expert who's joining us in the next few months, Finn Judell was saying that Chainlink is one that because it'll bring real world assets onto the chain and make them easily convertible to equities and things like that. Little bit over my head, but we'll get him to explain when he joins us in October. But he was saying that one was because it connects all the blockchains. But again, US dollar was down 1% this week, so I think those moves in gold and silver, and platinum, I still kind of think it definitely is negativity on the US dollar, but it just keeps trucking.
Yeah, it does. And one thing I want to say about Solana. So I've been in crypto a while, and I just remembered when I did my first Ethereum transaction, and it was like, don't pay 60 cents gas fee. Wait till do it at night. It's 50 cents gas fee. So that's just showing how old I was. But when Solana first came on, a lot of the guys were like, no, that's not actually decentralized. And then once it actually got traction and people were just using it, and the transactions were fast, we're like, who cares about decentralization? This thing actually just works. So it just shows you the religious fervor that is crypto. It's like, once you're in a certain narrative, people just kind of close.
It's the same. It's the same in stocks. Like, I mean, it almost harks back to what I was saying about Goodman Group before. Like, it's apparently the market's like, oh no, it's a REIT. It's like it was a data center stock when it was trading $42, and it's just I do love.
But I will just say the narratives and the religious fervor are on a different level when it comes to crypto.
Oh, crypto, yeah, no,
that's all I'm saying.
Crypto bros would be like, if they could talk to Bitcoin, they'd be like, "You've changed, man." Like, they wouldn't.
You sold out, bro.
Yeah, you sold out, bro. Like they wouldn't own Bitcoin anymore out of principle, surely.
Absolutely. Well, there you go. That's commodities and FX for this week. And what's next?
Just a quick note. Platinum and Palladium's had a bit of a run this week. Yeah, they recovered. They were looking grim at the start of the week, and it was a little bit of a crack at silver, but on one particular day. But the price action in silver's been like, it's been up when the others have been down towards the end of the week, and so this breakup doesn't surprise me. It has tended to have really big moves on a Friday night, and quite often disappointingly to the downside, because I'm a massive silver bull, as we all know. But I'm hopeful for tonight. Now I've said that out loud. I'm sorry to everyone who's long silver. I've probably just put the mocker on it. But look, apparently there was a large institutional short in silver. Again, take this with a grain of salt, because I don't know how much people really know about this stuff necessarily and what's been hedged, etc. But the lending rates for physical have gone through the roof as well. They normally sit at 1 or 2%. Now, apparently, if you want to get lend a whole, like, to guarantee physical, it's now 5 or 6%, which is record highs, which usually means that people have obviously been caught short and they definitely need it back. So it's like getting caught, I guess, you borrow stock and get caught short, but the rates have gone through the roof apparently, which is a precursor to a silver move. But again, it could be I think my Twitter feed and my Facebook feed knows that I'm a silver bull, so it probably just feeds me more of the Kool-Aid. But
yeah, just a little bit of confirmation bias.
Just a tiny bit. Look, we're all guilty of it. At least
it's human nature.
Acknowledge it. Mm-hmm. Oh yeah, give me. What were we saying earlier in the week? It's just we don't want to hear your new stuff. Just play the hits.
That's it. I'll let you take a bow or call your mo on trade of the week.
I'm not. Well, it is definitely going to be no holds barred brag. But I did enjoy putting this together. I will say, I constructed the overall thematic. I didn't choose the stocks. I think I said, here are 4 stocks, you boys, because I mean, you and Nate are really much more stock specific. Like Kai and I very much, we got macro backgrounds, being ex-futures traders, where it's working very well at the moment. But I think I threw it out to you guys and said, can you just pick 2? I didn't necessarily want NVIDIA in there because I thought it had run. And you guys, well, the consensus of the team was we picked pretty damn well. So yeah, this thing's a 2-year strategy with 6 times leverage, but you've got to make up that first initial to pay for your leverage. Mm-hmm. So it was $15,000 down for $100,000 exposure, but that first 15% belongs to paying off the strategy. Mm-hmm. So and then beyond that, you get the leverage of $100,000. So how I selected the 4 was essentially, I went through and did some historical stats and potential upside, and made sure that they had high betas and they could rally more than, and they've consistently all rallied more than 20% a year, all the Mag 7 and things. But Oracle did look cheap. Definitely did not think it was 40% cheap. That's, but we sealed we closed that deal on the 1st of September. It was our highest selling deal. So there's also other parts of it. This part in particular, and I don't think I've ever seen something in 10 trading days of a 2-year strategy make up. It's paid for its leverage already, and now every percent we go up from here, it's like we've got $100,000 on for the sake of putting down 15. So there are certainly definite advantages in these high conviction thematics and trades we put on. We're using these enhanced growth strategies, and this is one that's gone right.
Yeah, absolutely. And I just want to say that the beauty of this is that rather than actually putting $100,000 worth of stock in play, by using these strategies, you're using less capital, as you say, capital efficient. You can put the rest into some fixed interest or some fixed coupon notes, and if the strategy doesn't work, you'll be in a much better off position. So, well done there, Mark, and well done to us for picking the right two.
Look, as I said, it was a team effort. So,
well done, MPC overall. Let's say that.
No, we'll give ourselves a pat on the back. You got to take the wins when you get them.
Oh, because, that's that. While it does sound like we're tooting our own horns, we do know that the market is very humbling at times. So we'll twirl when we can.
Yes, no, twirl the mo when I can. But 12 months ago, I couldn't have picked a winner in a one-man race. It was having an absolute shocker there for a while. But I mean, a lot of the thematics that I was having a rough time with, agriculture aside, which has been a disaster. But it's a little bit emotional, probably. Finally, just flicked to John Deere, which is kind of ag, but it's more tech stock now. But they have come good, but being 12 months early doesn't help anyone. So we're almost at the point where I'm going to get a diary for next year. I'm just going to write in 12 months ahead of time my ideas, and then we'll just open that page in 12 months' time and see how we go. Because a lot of these things don't filter through the market. Like, just being from a futures and bond trading background, it's like playing Super Bowl every day. Equities is just a little bit slower. People don't necessarily catch on. And if you're sitting there sitting on your hands for 12 months waiting for something to happen, it's a pretty frustrating 12 months. So yeah, it's been a learning experience, and you've helped me through. JT. You've wrangled me a little bit there. I even bought a stock that was up 40 the day after it was up 40% on the ASX, EOS, and that's gone well. So a leopard can change its spots, or a bear can change its spots. These. You've got to take these opportunities to take the win, I suppose. But
absolutely.
But one thing I will say as well, speaking of wins, polymetals, mate, the busted through targets this week. That was a previous stock of the trade of the week. I'm not entirely. It's above $1 now, but you wrecked that somewhere in the 70s.
108. I've wrecked that twice now for ASX Alpha. And the funny thing was, I got that on the call, and I was like, never heard of it. Then I looked at it, I'm like, oh, why haven't I heard of this? And I instantly wrecked it. Yeah,
but it was only because it was a non-producer, basically, wasn't it?
No. I mean, I try and it just shows that even though I think I know the gold market and I know the major players, things go under the radar, and I only heard of
silver,
it.
It's silver, though, isn't it?
Yeah, but I only heard of it on the call.
Yeah,
I did the I've never heard this one. Had a look at the research, liked it straight away. So I wrecked it once in the low 70s, bounced to I think 90 odd cents, pretty much within 2 weeks, and then I wrecked it a few weeks back I think 78 or 75 cents, and the target was 104, and it hit 108. Or it's at 108 now. So yeah, I think that that heads on higher.
Yeah, we probably got enough silver, but I I think like Micron, you probably give it a crack, but it may be a bit of bias. I've been waiting for silver to rally for bloody 2 years.
Yeah.
Now all we've got just copper to go, and I filled my bingo card.
That's true, but that's got a long way to go to get back to record highs again. So what you'll need Trump to do that whole 50% tariffs? Yeah, 50%. Bang.
Well, strangely enough, that actually that was only good for the US, the COMEX one. But it is at record highs, I think, LSE. But look, I mean, I need a 50% rally in copper to be anywhere near where I think it should be. So record highs isn't nowhere near good enough for me. But it's you've always got to have a project. And copper's one of my last little projects for now. And yeah, so we got Fear and Greed coming up.
Oh yeah,
is that last week's or this week's?
No, that's this week's. I definitely upgraded it. So I think it was like 52.
It goes to show.
I think it was 52 last week. Yeah, and it's neutral. Were we bullish last week or were we bearish? I
think you were bullish and I was bearish because of payrolls.
Yeah,
because I've been waiting for that payrolls as you said, for 85 episodes.
Yeah, I now remember I was bullish mainly because this Fear and Greed, it's not greedy enough. The fact that we're at record highs and we aren't in extreme greed tells me that not everyone is long enough yet. even though like there's huge retail participation here. It looks like we could be in melt-up territory where this market just wants to, defy gravity and head on higher, and not everyone's on it yet.
I can't see this thing. I mean, we've got the Fed meeting. We've got a bunch of central bank meetings next week. So we got RBA Assistant Governor speaks Tuesday. We've got the Bank of Canada, followed by the FOMC on the Wednesday night. That rolls into Bank of England, and then on the Thursday night, and then Bank of Japan on Friday day. Mm-hmm. So there's going to be a lot. But look, I now think we're going to get 50 because I think Trump's going to have. He's probably had a private investigator follow every member of the Fed for the last 3 weeks, and they've now got the numbers to be able to do it. So, and if I was them as well, if they're going to go by 75 over the course of the next couple. Why wouldn't you just do 50 just to keep him happy, and get him off your back? So I reckon, as much as they say they're independent, mate, when you're getting your finances rummaged through, I'm pretty sure they're going to feel the pressure. So and they're still working out whether that Lisa Cook that he fired is going to turn up to the meeting because her dismissal was overturned at a lower court, and Trump's trying to fast track it before the meeting to be at the Supreme Court, which he owns, of course, because 2 people managed to die in his last term and he replaced them. It was very convenient for him. No dispersions there. That was just an act, it was just he just happened to be in power.
So either way, I am bullish for next week. This market looks like it wants to head on higher. So I'm a momentum guy. So I'll just go with the momentum. How about yourself, Mark?
I think we're going to get 50, and I think the market's going to go woohoo 50, and I think it'll be a very good time to sell into it. I think JP Morgan and Goldman's have both released notes recommending their clients to sell into a 50 into a rate cut. And I tend to agree, but it'll be Thursday by then. There's every chance we're up 1% a day for the next 3 days, for Monday, Tuesday, Wednesday leading into it. Because all they're going to talk about is it 25 or 50. Mm-hmm. And then Trump's going to start he'll put pressure on them over the weekend and things. So, I reckon we'll get it. We might get a 50, which is only a 20% chance, but I reckon they might do it. They'll get that. It'll be like, woohoo. And then I dare say that might be the top. So, because your emergency rate cuts 50 is classified as an emergency rate cut. No market has ever rallied after a 50 ever in history because there's a disaster happening in the economy. But having said that, I've never been in a market where there's been an industrial revolution style event like AI. So, history's not always, a reliable indicator when you bring into account. Like I looked into the rollout of electricity and the rollout of paved highways in the US in terms of infrastructure, because I was just trying to find some examples, and man, they got a national paved highway network done in under 10 years. Back, when the T model Ford started to get too popular, and they had like electricity was like 10 or 15 years as well. And in most metropolitan cities, like, this is probably bigger than those things. So that I am definitely not bearish that little section of the market that's AI, and the rest of the market I think is pretty weak. But I'm bullish for next week, but because everyone's going to be talking about how many rate cuts we're going to get.
Okay, fair enough. So 2 bulls for next week. We'll keep score, and we'll update next week.
No problemos. And I hope everyone has a great weekend, and we will speak again next week, I suppose.
Yep. Thank you.